Welcome to accounting. This is for chapter 7. We're going to be discussing lesson 1, preparing an income statement. As we go through this, be sure you're filling out your notes. I'm going to show you a PowerPoint so you can see the pictures, but you need to be going through the guided reading notes and answering the questions in that. If you need to look in your book, chapter 7 starts on page 178. And so some of the objectives for this chapter, we're going to learn about the accounting terms related to the financial statements for the service business organized as a proprietorship. We will be identifying several accounting concepts and practices related to preparing the financial statements. We will then prepare an income statement, and we will be preparing a balance sheet, and we will analyze these to see how our business is doing. So the first section, 7.1, is over preparing an income statement. And there are several accounting concepts in this first section. First of all, financial managers need to know if they're making money. So before they can make any good decisions, they're going to have to know this information. Of course, they can always look through all the general ledger accounts and find this information, but there's a lot of information in that, and we need it to be more summarized instead of so detailed. We also need to make sure that we are including all the information. So we don't want to just talk about rent expense and we left out utilities expense. So we have to have a complete, clear, summarized picture of how much revenue we had and how many expenses we had to know if we truly are making money and to know how we want to take our business during the next month. And the accounting concept adequate disclosure is applied when financial statements contain all the information necessary to understand a business's financial condition. Techno Consulting prepares two financial statements at the end of every month. They prepare an income statement and a balance sheet. And the consultant always prepares these financial statements at the end of each monthly cycle. That concept is the accounting period cycle. So there's two concepts already. The third one is the concept of going concern. And that means when you are opening your business and running your businesses, you intend for your business to stay open indefinitely. And so the owner, Kim Park of Techno Consulting, intends to run her business for many years, and when she's ready to retire, she intends to possibly sell the consulting firm to another one. And that is the concept of going concern. An income statement is going to report the financial information for a specific period in time, indicating the financial progress of a business in earning a net income or a net loss. Expenses are the amounts that we're going to pay for our business in order for it to be able to earn a revenue. And sometimes the revenue earned and the expenses incurred do not always happen in the same fiscal period, but we need to report those expenses in the same fiscal period in which the revenue is earned on them, and that is matching expenses with revenue. And that is what we did in chapter 6 when we prepared the worksheet. So we're going to start by looking at, here is your worksheet information. We had started with listing all of our account titles, and then we did our adjustments, and we carried everything from sales down over to the income statement columns. So here you can see what our sales were, what our expenses was, and you can see that we reported a net income of $2,099. So we're not worried about anything in the balance sheet columns for now. We're just worried about the income statement. Did we show a profit or a loss for this month? So we're going to take that information and take it to our income statement. We're going to start with the heading. The heading of the income statement contains 3 lines, just like our worksheet did. The first line is the name of our business, Techno Consulting. The second line is the name of the report. For this one, it is the income statement. And the third line is the date. This is going to be for month ended August 31st, 2014. An income statement always has for month ended or for year ended. It is for something ended. Okay? Next, we're going to go on once we have our heading and actually, so it goes through and puts all the dots on. Okay, we're going to, there's 4 sections for our income statement. The first is the revenue section, and so it's pretty simple. We only have one kind of revenue in techno consulting, and that is from sales. If we had more than one kind of revenue, maybe we had sales, maybe we had sales from merchandise, sales from service, we had rent income, whatever we had, we would list all of our revenue together, and that is always going to be in your credit column of your income statement on the trial balance. Next, we're going to list all of our expenses, and these are after we've already done all the adjustments. You can see insurance expense has an amount and supplies expense has an amount, and those would not have had amounts until we did the adjustments on the worksheet that we did in Chapter 6. So the first section is always going to be your revenue section. When you list it, you're going to title it revenue with a colon, and then you're going to list out all your revenues down here. We only have one, and that's sales, and so it's indented just a little bit. And we're just going to go ahead and bring it over to the right-hand column. Next, we're going to, our next heading is our expenses. So we're going to list it, and then we're going to indent and list all of our expenses. Now on this one, we're going to start by putting them over here because we only had one type of expense. Then we're going to come down to the bottom and total. So this is not a debit and credit column like we've been used to. This is basically a summarizing column, and then over here is where we're going to put all of our totals. So because we only had one sales, we didn't have to summarize it. We could just take it all the way over. Expenses, we have more than one. So we're going to have to list out all of our expenses, and then we're going to come down here and put total expenses, and we're going to put our total over here in this column. Be sure you draw your lines to indicate that we're going to add. The next thing we're going to do is take our sales minus our total expenses to give us our net income, which when we take sales minus the total expenses for this one, we get $2,099. Now, you should add these, or you should subtract these, and then you're going to double check this number against the number on your worksheet, because that worksheet number should be, if I can get back to the worksheet, $2,099. So it's the same number. You need to make sure that that equals the same. Of course, you could just rewrite it, but it's always better to do your math again. That way you make sure that if you would have written something wrong down here, you would have caught that information. So here we're going through and listing all of our things. The next thing we're going to have, after our revenue, then we have our expenses, and then we have our net income that we have calculated. Of course, you're going to draw your double rule line to prove that that is correct. Okay. The next part, so that was very simple. All we were doing was copying the information. Here is what your completed balance or your completed income statement is going to look like. Oh, take it back. Okay. So we've already done our heading. We listed out our revenue and our expenses. We come out with our net income. Over here, percentage of sales. This is something new that we have not done before. This is called a component percentage analysis. Okay, a little bit bigger math, but still not too bad. We want to know what percent of our sales our expenses accounted for and our net income accounted for. So our sales were $3,565. That's 100% of our sales came from our sales. That's a no-brainer. You guys can get that one. So then we want to know, out of that $3,565, what percent of our sales went to pay our expenses, and what percent was left over for our net income. So this is just a simple math formula. Okay, it doesn't show it here. So what you're going to do for your math formula, give me a second and I'll show you. Okay, so we're going to go ahead and just find the component percentages, and here is your formula. To find the total, or to find the total expense component, which is the first one we're looking for because sales was an easy 100% was the revenue. So for this one, we're going to list our total expenses. We're looking at our area over here, total expenses 1,466. So total expenses was 1,466. And we're going to divide that by our total sales. And our total sales was listed right up here as $3,565. Okay, you go ahead and you do that math, and you're going to come out with 41.1. When you're doing component percentages, it will tell you, but most of the time you're going to use one decimal place. And when you write this on your form, all you have to do is put the 41.1, such as here. You do not have to put the percentage after, because at the top, it shows the percentage of sales. I think I've got that cut off for you. But you do not have to put the percentage on that one. So let's go ahead and go back and do the net income percentage. Same thing. Our net income. So our net income was, according to what we put on our balance sheet, was $2,099. We're going to divide that by the amount of our total sales, and our total sales was showing as $3,565. So that is going to equal a net income component percentage of 58.9. Okay, again, you don't have to put the percent sign because we already know it's a percent. So we would take that back over here, put our 58.9. Now, just to double check, you should be able to add your 41.1 and your 58.9, and those should end up being 100.0. Again, it will tell you how many decimal places you need, but typically you need to extend this out to one decimal place. Okay, so that's a very easy component percentage. Now, what does that component percentage mean? Well, in your book, it talks about that, and a component percentage is actually one of the most important things on why we're doing our income statement in the first place. First of all, we need to know from our sales, did most of it go to total expenses, or did most of it get to come home with us as our net income? And depending on what percentages are acceptable is going to depend on what kind of business you are in to know if it's an acceptable percentage. Okay, so we only had one kind of sales or one kind of revenue. We'll go ahead and look at the next page. And over here. And you can see that on this one, they are showing, let's see if I can make that big. This one, they're showing that they had two kinds of revenue. So they had sales from lessons and sales from repairs. So they had to list them over here in this column, and then they put the total over in the, what I would call the total column. Okay, this one also had a net loss. So to write a net loss, in accounting, you always write a negative number using a parentheses around it. So we have a parentheses to show our net loss, and then our component of sales is also in parentheses because that was also a negative number. Okay, so two definitions that you need to know. First of all, you need to know what is a stakeholder. And if you're looking in your book, you're going to find that listed on page 181. And a stakeholder is any persons or groups that will be affected by an action. So if your action is going to affect somebody else, then they are your stakeholders. The next definition you need to know is your component percentage. And you can go ahead and copy that from page 184. And your component percentage is the percentage relationship between one financial statement item and the total that includes that item. Okay, your component percentage is what you're going to use to analyze how your business did. Okay, if you'll look at the next video, we'll go ahead and do the work together.